You deposit your first $500 into a brokerage account, and a screen of red and green numbers immediately feels overwhelming. You're watching prices tick up and down, feeling completely at the mercy of every movement. It's easy to get caught in the cycle of guessing, trying to predict what a company's stock will do tomorrow, or panicking every time the ticker moves against you. But staring at the chart doesn't provide control over it. Control comes from setting up an automatic transfer. Every month, regardless of what the news says, you invest your $500 or $1,000 into a set mix of index funds. You finally stop guessing and start buying. This chart shows how that strategy actually works. The jagged line represents market chaos, but those perfectly spaced points represent your monthly commitment. Buying continuously through the highs and the lows averages out your entry price, mathematically neutralizing the risk of timing a market drop. This shift to a mechanical system is the first step. As your capital grows, the rules of investing break and rebuild themselves across 8 distinct levels, each granting a different degree of power within the financial system. Success at this stage looks like unlearning the urge to react. It is about building a structured habit so you can survive long enough to participate in the levels that follow. Crossing $100,000 changes the math. A routine 1% market move is now $1,000 in real wealth. A strong year can add 5 figures to your net worth without a single additional contribution. The numbers are finally large enough for small optimizations to have a major impact. This is the level of asset allocation. You build your strategy around rigid percentages, like 70% equities, 20% fixed income, and 10% cash. These blocks automatically resize to maintain equilibrium. When one sector grows too large, you trim it, and when another falls, you add. You also begin using tax loss harvesting. By extracting losses from underperforming assets, you mathematically neutralize your capital gains, protecting the overall structure of your wealth. Your priority shifts toward calculating the probability of the maximum downside risk. You evaluate investments based on how they behave during market stress, ensuring your capital survives the lean years. This stage is about building an emotionless, insulated machine. It captures the market's growth while shielding you from the destruction caused by its volatility. At $1 million, the financial system changes its behavior toward you. You move beyond the public stock exchanges that are available to everyone else. A private reality opens up. You gain access to venture capital deals, real estate syndications, and private equity funds. These opportunities are negotiated in private networks and offered to you because your capital qualifies you for the risk. This access comes with the cost of illiquidity. While the potential returns are significantly higher, your capital is often locked away for 5 to 10 years. You have to be comfortable with your money being unreachable while it grows. Moving towards $10 million requires a full-time focus on capital management. You likely operate through formal structures like a family office, deploying funds across dozens of different strategies to ensure your wealth is being utilized effectively. At the high net worth tier, the primary challenge is filtering the immense volume of deals presented to you. You are managing the complexity of these private holdings while navigating the risks of long-term illiquidity. At the institutional level, you are allocating hundreds of millions of dollars. You direct the flow of capital into entire economic sectors, influencing the growth of industries rather than tracking individual companies. Moving capital at this scale takes years of planning. Because your allocations are so large, entering or exiting a position too quickly would permanently alter market pricing before the trade is even finished. And then, finally, you reach the billionaire level. Capital at this scale operates like a glacier. It possesses a physical weight that reshapes the bedrock of the market as it inches forward. Level 8 involves buying outright control of organizations. You negotiate private transactions that allow you to dictate a company's direction and fundamentally change how an entire industry operates. This power creates a massive footprint. Every time you attempt to move your capital, the entire market notices and reacts to your presence instantly, making liquidity your greatest strategic challenge. Ultimately, investing is an evolution of power. Small portfolios are forced to drift with the market's whims.